Have you ever found yourself wondering why, despite all your efforts, you're not making the profits you expected from swing trading in these lightning fast markets? Well, you're not alone. Let me share a story that might sound all too familiar. A friend of mine, Alex, jumped into swing trading with dreams of quick gains and financial freedom. He thought he had it all figured out after watching a few online tutorials and reading market news. But instead of watching his account grow, he saw it go down faster than he imagined. Why? Because like many beginners, Alex made some critical mistakes. Now you might be asking, what went wrong and how can I avoid making the same mistakes? That's exactly what we're going to dive into today. By sticking with me until the end, you'll not only uncover the common mistakes that hurt most beginners, but also learn how to navigate the choppy waters of swing trading in fast-paced markets, all right? Now trust me, understanding these mistakes and learning how to avoid them could be the difference between winning big and barely surviving in the trading world. So let's get started and set you up on the path to swing trading success. As always, nothing in this video is financial advice. It's all for informational purposes only. Number one, not having a trading plan. To make a long story short, trading without a plan is like setting sail without a map. You might catch a favorable wind now and then, but chances are you'll end up lost at sea. A solid trading plan outlines your goals, risk tolerance, criteria for entry and exit, and money management strategies. It's your blueprint for success in the volatile world of swing trading. Yet beginners often jump in based on a hunch or a hot tip, ignoring the foundational steps of crafting a plan. The result? Stupid decisions. All right, inconsistent results, and more often than not, unnecessary losses. 2, over-leveraging. Here's a term that gets thrown around a lot: leverage. It sounds enticing, right? But the idea that you can control a large position with a relatively small amount of money can make your eyes turn into dollar signs. But here's the kicker: over-leveraging is a double-edged sword. It can amplify your gains, sure, but it can also magnify your losses, and fast. Beginners often fall into the trap of over-leveraging, seduced by the potential for huge returns, only to find their accounts wiped out by a single market move against them. Remember, leverage should be used sparingly and wisely, not as a high-stakes gamble. Number 3, ignoring technical analysis. Now, onto technical analysis. This is where things get really interesting. Technical analysis involves studying price charts and using statistical indicators to make trading decisions. It's like reading the market's tea leaves, right? Except those leaves are made of numbers, trends, and patterns. Many beginners either neglect technical analysis altogether or give it a cursory glance without really understanding how to use it effectively. The truth is, mastering a few key technical analysis tools can significantly enhance your ability to spot profitable trading opportunities and avoid potential pitfalls. 4, over-reliance on news and tips. Did you hear the latest news on XYZ? Yeah. It's easy to get caught up in the buzz and make impulsive trading decisions based on news or tips from so-called experts, right? But here's a thought. If it's on the news, you're probably too late. The market reacts to news very quickly, often in a matter of minutes or even seconds. By the time you act on a tip or opportunity, it's probably already passed. Or worse, the market has already moved in the opposite direction. Successful traders use news to inform their strategy, not dictate it, okay? 5, poor risk management. Risk management is the bread and butter of trading. It's what keeps you in the game over the long haul. Yet beginners often overlook the importance of setting proper risk limits. They might risk too much on a single trade or fail to use stop-loss orders to protect themselves. Good risk management involves knowing how much you're willing to lose on a trade and setting your trades up so that even a string of losses won't knock you out of the market. It's about playing defense so you can stay on the offensive without risking the farm. Number 6, failing to set stop-loss orders. Now, speaking of stop-loss orders, let's talk about these lifesavers. A stop-loss order automatically closes out your position at a predetermined price level, limiting your loss on a trade gone bad. It's essentially your safety net. But for some reason, beginners either forget or actively choose not to set them, all right? And it's often driven by the misguided hope that a losing trade will turn around. This hope can lead to significant losses, all right? Been there, done that, learned the lessons early on, don't do it anymore, okay? Number 7, letting emotions drive decisions. Emotions. They can be your worst enemy in the trading world. Fear, greed, hope. They can turn a rational trader into a speculative gambler in no time. The key to success is learning to manage those emotions, not letting them dictate your trading sessions. This means sticking to your trading plan, avoiding impulsive trades, and knowing when to cut your losses and take your profits. Remember, the market doesn't care about your feelings, so don't let your feelings mess up your trading strategy. Number 8, neglecting the importance of timing. Timing is everything in swing trading. Enter too early and you might suffer through unnecessary volatility. Enter too late and you miss the bulk of the move. Exiting is just as crucial. Hold on for too long and you might see your profits vanish. Bail out too soon and you leave money on the table. Successful swing trading involves careful timing based on a combination of technical analysis, market sentiment, and yes, a bit of intuition honed by experience. Number 9, underestimating transaction costs. Let's not kid ourselves. Transaction costs can eat into your profits like nothing else, especially if you're trading frequently. Beginners often jump in, eyes wide open at the profit potential, but somehow blind to the cost of doing business. Every trade has its price, whether it's commission, spreads, or slippage, and these can add up quickly, turning seemingly profitable strategy into a break-even or even worse. Smart traders always calculate these costs into the trading plan, ensuring the strategy is profitable even after the tax man collects his dues. Number 10, lack of diversification. Here's a classic rookie mistake, putting all your eggs in one basket. I get it. You've done your research, you're confident in your pick, and you go all in. But markets can be unpredictable, and even the most solid bets can go south for 1,000 different reasons. Diversification isn't just a safety net. It's a strategic approach to spreading risk across different assets, ensuring that a hit on one front doesn't sink your entire portfolio. Remember, the goal is to play the long game, and diversification is key to surviving the market's ups and downs. Number 11, not learning from mistakes. All right, let's have a heart-to-heart. Everyone makes mistakes, especially in the beginning. But here's where the rubber meets the road. Learning from those mistakes is crucial. Beginners often brush off losses, blaming the market, bad luck, or bad tips, without taking a hard look at what went wrong. The most successful traders keep a trading journal, reviewing their trades to understand their mistakes and learn from them. It's this reflective practice that turns painful losses into invaluable lessons, paving the way for future success. 12. Disregarding market trends. Going against the grain can be a recipe for disaster. Sure, there are legendary stories of traders who made a fortune betting against the market, but let's be real, those are the exceptions, not the rule. Beginners often disregard overall market trends, either because they don't recognize them or they believe they know better. But here's the thing, the trend is your friend until it bends. Understanding and respecting market trends is crucial for timing the trades and making informed decisions. Ignoring them is like swimming against a riptide. You might feel like you're making progress, but you're just setting yourself up for exhaustion and potential disaster. Number 13, not enough research and preparation. Jumping into swing trading without doing your homework is like showing up to a gunfight with a knife. You're just not properly equipped. And yet, so many beginners do just that, right? Spurred on by overconfidence or impatience. But here's the deal. The market is unforgiving and it won't hesitate to school you, often at a big cost. So proper research and preparation involve understanding the assets that you're trading, the market conditions, and how different factors can influence price movements. Is time consuming? Sure, but it's also the difference between gambling and trading. Number 14, jumping into complex strategies too soon. There's something about complex trading strategies that seem to attract beginners like moths to a flame. Maybe it's the allure of quick profits or just the novelty, but diving into advanced strategies without a solid grasp of the basics is a surefire recipe for disaster. The key is to start simple, master the fundamentals, and gradually incorporate more sophisticated strategies as you gain experience and confidence. Remember, in trading, complexity doesn't always equal superiority. Sometimes the simplest strategies are the most effective. Number 15, not using demo accounts for practice. Here's a tool that's as underutilized as it is valuable: demo accounts. Many beginners bypass demo trading, eager to dive into the real thing, but that's like trying to run before you can walk. Demo accounts offer a risk-free environment to test strategies, get familiar with the market, and develop a feel for trading without putting your capital on the line. It's an invaluable learning tool that can significantly shorten your learning curve, and skipping it is like skipping rehearsals for a live performance. Why would you do that to yourself? Number 16, overtrading. Man, this one's a biggie. The excitement of trading can be addictive, right? Leading to overtrading, making too many trades too quickly without proper justification. Overtrading not only increases your transaction costs, but also exposes you to more risk and can lead to decision fatigue, impairing your judgment, okay? The key is quality over quantity. It's better to make a few well-considered trades than a slew of haphazard ones. Remember, in trading, patience is not just a virtue, it's a strategy. You have no idea how many members in my Patreon will message me saying, hey, I didn't get any trade alerts today. Is there a glitch or in the system, or am I missing something? No, there's no glitch and you're not missing anything. There are just some days where I don't make any trades at all because there's no setup, there's no opportunity, and it doesn't make any sense to enter a trade that doesn't meet my entry requirements. You have to be patient and wait for the setups to form and not force trades just for the action, okay? Now, number 17, ignoring the psychological aspects of trading. Finally, let's touch on the psychological aspect. Trading isn't just a test of skill and strategy. It's a test of character. Fear, greed, impatience, overconfidence. These psychological factors can lead to poor decision-making and significant losses. Successful traders work as much on their mental and emotional discipline as they do on their technical skills. Developing a trading mindset involves cultivating patience, resilience, and emotional detachment, ensuring that when the heat is on, you keep a cool head. And remember, knowledge is power, but only when it's applied. Take these lessons to heart, put them into practice, and watch as your trading game goes from weak to strong. Stick around and make sure you subscribe to my channel because we're just getting started. There's a whole lot more to learn on the trading journey and trading mastery. So if you're looking to take your trading to the next level, don't forget to check out my all access Patreon. There I share real-time alerts on trades I'm actually making, exclusive market insights, my personal portfolio strategies, and a community chat, and weekly watch lists. Click on the link in the description below to join and elevate your trading game. I'll see you on the next one.